What are some general approaches to decision making with regard to risk and potential return? Well, one of the more common methods of assessing risk and potential return is to look at expected value. That is, you multiply the potential value of a course of action by its probability of occurring, and that is the value of that decision versus another. So you would then compare the values of each decision based upon potential outcome times probability, and most of the time you would choose the higher outcome. But this is not always the case. Sometimes people have penchants towards different selection criteria or bases. For example, let's look at the maximax approach for decision making. This is where an individual is going to choose the highest potential return for an outcome regardless of the potential losses involved. They're simply looking to maximize potential for outcome. Now, this arises oftentimes when losses are irrelevant. That is, the person making the bet is not going to suffer the loss. It's sometimes involved with a gambler's fallacy, where they believe they're playing with house money or money that's already one that otherwise isn't theirs, right? And they're just trying to grow on top of that. So this is a unique approach that doesn't necessarily appreciate the probability of a negative return. A maximin approach is where you look for the best approach among the worst outcomes. So basically, it's a pessimistic approach. The pessimist might say, well, I believe that the worst possible scenario is going to arise, and if that's the case, and then you have options for courses of action with that negative occurrence, then you choose the option or choice that is going to maximize your value created among those negative scenarios. They don't appreciate the other side of the coin, that is the potential for a more positive scenario or more positive outcome, whereby it may be that if the positive scenario arises, that there are numerous options that would create tons of value where any of these three would not. But once again, you're trying to minimize your potential for loss. So you're choosing the highest of the worst consequences. Now, yet another approach is the minimax approach. And this is where you simply try to avoid regret. We've all heard the scenario of Monday morning quarterbacking, or looking at a decision after the fact and believing that you could have figured out how to make a better decision at the time. So people who go into a decision wanting to minimize their regret after the fact if something goes the way they don't want it to, oftentimes choose an approach where they look at the best possible outcomes for a potential course of action. And they say, okay, well, maybe there's a optimistic, expected, and then a pessimistic potential outcome or context in which the decision is made. And so you look at the potential outcomes within each of those scenarios, whether it's going to be favorable, expected, or unfavorable. And then you subtract from it, okay, the value of it occurring. So the outcome times the probability of it occurring, just like an expected value. You would subtract the probability and value of other occurrences, of anything else occurring from it. When you do this, you're generally going to come up with a negative number. In best case scenario, you're probably just at 0. So, but the closer you get towards a positive number, the better the scenario with regard to minimizing regret. Because in essence, what you're saying is the probability of the best outcome minus the probabilities of the other outcomes means that I'm going to maximize value regardless of the scenario that arises. So regardless, I'm taking a decision that is going to not cause me to say I should have looked at it differently, or I should have taken a different course of action, because I'm minimizing the regret I have. And this is the type of approach that someone might take long term to create long-term consistent value and to avoid the ups and downs of, say, market cycles in investing or something like that. So anyway, this is yet another approach. So these are just some general approaches that you have towards decision making with regard to risk, value, and probable return of that value. So with that being said, there are probably many names by which these types of determinations or calculations go, but these are some primary mental approaches to decision making.